Oh, hey, sorry. I was just watching a trading video on YouTube. And it's kind of funny. You clicked on this video even though I literally just told you to stop watching trading videos on YouTube with the title and the thumbnail, but I'll go ahead and give you a moment of grace here because I think this is something we're all guilty of. Scrolling through YouTube endlessly, myself included, watching trading videos, hoping that you're finally going to get something that clicks and makes you connect and makes you feel like you sort of have kind of a predictable path to getting profitable. I'm here to tell you this is not the case. I'm very sorry. Trading is a very unbelievably difficult thing to do, and you probably shouldn't even be doing it to begin with. But here in this video, I'm actually going to teach you what I believe is a counterintuitive way to actually getting profitable. I've been giving this non-financial advice, generalized suggestion for educational purposes only for the past 3 years whenever I first had a client actually tell me that he was struggling because he was just getting so much information that he didn't really know which direction to take. I told him to stop consuming trading content. No Instagram, no Facebook, no YouTube, no blogs, no social media, no nothing. To just completely abandon the search for more information. Because more information about trading is not going to save you. If you already know the basics, if you know how to place a trade, you understand that if you buy before the market goes up or you sell before the market goes down, you're going to make a profit. If you understand the basic stuff, that's really all you need. And this is just me speaking from personal experience. It's just my personal opinion, not a financial advisor. Trading's risky. Most people lose money, and you're probably going to lose money even if you listen to every single thing I say. This video is to convince you to abandon searching for more trading information and instead start focusing on your own trading approach, gathering experience on your own, testing, optimizing, and improving over time to become the profitable trader that you think you can be. Okay, like I said, most people aren't going to make this happen because it's really, really difficult. I'm speaking to you if you're not going to give up no matter what the cost. A couple years ago, this is actually 8 years ago now, I sacrificed everything to pursue trading. I dropped out of college. I stopped talking to a lot of friends. My own parents, except for one of my parents, didn't support me doing it. I literally abandoned everything to go all in on trading. And it took me almost 2 years to get profitable. But since then, the past 6 years have been a dream. I've got to live the life that I love. I do whatever I want. It's literally freaking amazing. And I believe that people who truly set their mind to it, that have a reasonable degree of intelligence, that can learn through an iterative process of learning through mistakes and optimizations and things like that, I believe they can get profitable too. And that's who this video is for. It's for you, if that's you. Let's go ahead and get into it. I'm going to share my charts right here, and I'm going to show you why I believe that this is the case, that you should just abandon trading videos. Whenever you trade, let's say that you have a we'll do a stupidly simple trading approach, which is my approach. You'll see the only tools I have is this little rectangular box and then this little path tool here on TradingView to show like arrows in which way I think price is going to go. Now you can trade all sorts of crazy stuff. You can trade smart money, order block liquidity, bank manipulation, Wagyu beef, bullish candlestick entry strategy systems, or you could just trade support resistance. I mean, this is all I do. There's nothing better or worse about my trading approach. Everything works. I'm going to say that again. Even some of the crazy shit you see with this institutional Wyckoff smart money concept shit, even that works technically in theory. You know what I mean? It's just really, really complicated, and I think you get the same result by keeping things simple. But that's just me. It's whatever. Just my opinion. Since everything works, I just use support resistance. Support resistance has zero predictive power. Whenever you see price come to a zone, price is either going to go up or down at anywhere on the chart. So when price gets to that zone, it has a 50% chance of breaking through it and a 50% chance of bouncing at it and going down away from it. Where do you draw support resistance zones? Anywhere on the chart where you want. They all have a 50-50 win rate, a success rate, meaning it's going to break half the time and it's going to bounce half the time. Now, how do you get yourself into structuring this in such a way that you can actually profit from it pretty consistently? The way I do it is I just draw really clear support resistance zones and I set alerts at those support resistance zones, and I make sure that they're insanely clear and very well defined. So stuff like this up here, I thicken them up. They're not like crazy thick, like they're 100 pips or anything, but they're just thick enough to encapsulate most price data and very clearly defined. I do not use zones like this where price has broken back and forth through them over and over and over. I don't use zones like that typically because they don't give a very clear way of controlling risk. Controlling risk suggests that whenever price gets to one of these zones, you have an area that you can enter at. So you can enter at the zone. You can have a stop loss below the zone and then a target above the zone for at least a 1-to-1 risk reward ratio. Off the bat, you already have a system that's 50% profitable that takes zero work. Now what you can do is if it starts breaking the zone and going against you, you can close the trade at a loss, try to get it out of it a little bit before it hits the stop loss. And then if it goes to the target, just hold all the way to the target. What this means is if this is the case with a 50% win rate, it means that you're making a little bit more on your winners than you lose on your losers. This is just dirt simple. And then if you just want to stop out immediately, you can just risk however much you're comfortable with and set like a 1-to-2 risk reward ratio. It's the same shit, except now you're just getting stopped out instantly instead of closing it manually. All you have to do is just make a little bit more than you lose. So since this is the case, you're up here and you're looking at all this shit on YouTube trying to figure out like these head and shoulder patterns, and then you're misapplying them in the wrong market context. Then you see a double bottom. So you see price made like a double bottom, but you're forgetting it's in the context of a huge downtrend. So then it might break that. You see a break and retest right here. So then you might trade this break and retest, and you're wondering why didn't it work? The market just shot up from there. And then you realize that if you look back further, the market had come to an extreme daily support level, and then it was bouncing right there, and that's probably why it broke past the previous zone. So you end up getting so freaking confused. So here's what I'm here to tell you. I'm here to tell you, keep things ridiculously simple. It's the first thing. That way you have a predictable way of making decisions. Simply buying at support and selling at resistance with a 1-to-1 risk reward ratio, in my opinion, is a great place to start. It literally just gives you a way of saying, all right, yeah, now I know how to enter trades and I don't have to do all this like hour-long analysis for something that's still going to give you about a 50% win rate. Maybe once you get really good, maybe a 55 to 60% win rate. For most people that I see that are profitable, their win rates are typically 50% or less. Not all, but most people I see are profitable are that. They simply just make more when they win versus what they lose on their losing trades. That's simply it. So since it's this simple, if you start with something really simple like support resistance, you have an easy way of getting into trades, and you can do that in a predictable, consistent, sustainable way because of how simple it is. That's the first thing, keep things simple. The second thing is to control risk. Define what your risk is. Whenever you're entering at a support level, let's say you're buying at support and you're putting a stop loss just below it, you can calculate how much you're risking using a position size tool. I have a whole video on this on my channel. You can search after this video if you like. It's how to calculate position size, or how to select your right lot size. It's something like that. I made it a couple months ago. Very, very simple. You can risk $100 on that. You can risk $50. You can risk 80 GBP. You can risk 20 Australian dollar. You can risk 15 euro. However much you want. You can define exactly how much you're going to risk on that. That way, if you're keeping things simple and controlling risk, you have a predictable way of making the same trading decisions over and over, and you're never going to take a loss that's actually going to blow your account, or at least make you lose all your trading capital. I blow an account every now and then, but I deposit a small amount of my trading capital into an account, and then I risk that whole account to grow the account. Now, it's more like 10 to 20% per trade risk on the account. However, I'm not like, even if I blow the account, it's a small percentage of my trading capital. If you're controlling risk, it just means structuring risk in a way that you're comfortable with. And this just simply means defining the dollar amount and the monetary amount that you want to risk on a trade and doing that. So you're keeping things simple and you're controlling risk. Here's where the beauty comes in. You don't need to go to YouTube. You don't need to go to Instagram. You don't need to watch all these gurus try to tell you what the best way is to predict the market, because trading is not even about predicting the market, in my very humble opinion, with 8 years of trading and 6 years of trading profitably and teaching thousands of people how to trade. In my very humble opinion, trading is about controlling risk. You are literally gambling. You are placing a wager on an uncertain outcome every time you go to a chart. By definition, that is simply gambling. However, you can gamble in a predictable way whenever you're trading, because trading gives you a very clear, consistent, predictable way of controlling risk. On top of that, if you focus on your own trading approach and stop measuring everyone else's you-know-what by looking all around YouTube and trying to find a million different strategies that help you quote-unquote predict the market, which is a fool's game in my opinion, instead, you'll be focusing on your own trading approach and developing your experience. This applied experience will generate intuition. And this subconscious intuition that gives you the discernment and the discretion to make personal trading decisions depending on what the context is, that brings you wisdom. It brings you the type of wisdom where you can look at the chart and you've seen it for years, you've seen it 1,000 times over and over and over, that you know, okay, right here would be a good spot to sell at this resistance zone. I think it's going to bounce. Then you get in, you structure your risk. It also gives you the wisdom to say, price is plummeting into the support zone really fast. I don't think it's going to bounce here. For some reason, like I get a feeling it's not going to. That feeling you get that from having experience seeing the same thing over and over again. That's the beauty of just focusing on you. The sooner you start focusing on you, and the sooner you start abandoning watching trading videos on YouTube, and myself included, it's kind of bad. I literally have a trading YouTube channel But I'm telling you to stop watching trading videos on YouTube. But we'll never mind that for a second because we're focusing on you and your success here in this video. You can start focusing on your own trading approach and developing your own approach that makes sense to you, that works in the contents of your capital. That works in the context of your capital, your time constraints, your psychology, what you're comfortable with, like whether you're comfortable trading lower time frames, whether you're comfortable trading higher time frames in swing trading, or whether it's like a combination of the two and it's like top-down analysis where you kind of incorporate every time frame. Whatever the case may be, you can literally find something that works for you specifically, and I promise you, you are never going to find that on YouTube. You'll probably notice that once you do get profitable, for those of you that do get profitable, this is going to be anywhere from 10 to 30% of you, depending on what metrics you look at. So 10 to 30% of you who are going to get profitable within the next few years after watching this video, if you're not currently profitable, you will find that your trading approach is not going to be identical to any one person that you've ever learned from. You will find that it comes from a combination of taking bits and pieces of things you've learned online, or in trading books, or whatever it is, and a combination of experience that you've gathered on your own. All of this comes together and gets married in a perfect matrimony, a perfect harmony of your own personal trading approach. And I think that instead of having to learn this years and years from now, which is what it took me to do that, I think it will be better if you just make this decision right now. Go ahead and try it. For the next week, try to not watch a single video on YouTube about trading. Try to not endlessly, desperately scroll on YouTube trying to find trading videos that are going to help you try to figure out the secret strategy. There's no secrets. You just have to take some stuff, take a very, very simple framework. Like I said, my opinion is just keep things really simple and control risk. It's really hard to F that up if you're keeping things simple and controlling risk, because you're doing the two things that matter the most, in my opinion. If you're doing that, then you can focus on your own trading approach and you can build up experience. You're not going to have this endless anxiety, always wanting to learn the next thing in trading. I got to learn about moving averages. I got to learn about Fibonacci. Got to learn about smart money, order block, liquidity, bank manipulation, smart money concept, Wagyu beef, Kobe steak, fair value gap, distribution, right? I do this shit. For those of you that have been here on the channel, I go off on all these tangents about this really confusing trading strategies, which I just don't really hesitate to understand. But my whole point is if you do it on your own, you can keep things really, really simple and you can build up all that experience. And that, in my opinion, is what is going to help you get profitable more than anything else, more than anything I could ever teach you, more than anything that every single guru on YouTube could teach you combined. I think it's better if you abandon all this stuff. And then once you start to make some progress on your own, maybe you come back on YouTube and watch some trading videos just for shits and giggles, just to kind of have fun, just for entertainment. That's perfectly fine. But in the meantime, if you're not yet profitable, I think you should structure a very simple trading system, and I think you should focus on controlling risk and then focus on you. Go out, tune out all the noise, and just focus on you. Try it for at least just 1 week before starting to come back on social media at all or anything. And if it's working and you're making progress, maybe try 2 weeks, 3 weeks, 4 weeks. The more you focus on you, the quicker, in my humble opinion, not financial advice, the quicker I think that you'll get profitable, for those of you that are going to, in fact, get profitable at some point in the future. If you'd like to see the way that I trade after you come back to social media, the first link in the description of this YouTube video is my free Telegram channel. I literally share all my daily analysis and insights and everything in that free Telegram channel, and I have been doing it for almost 6 years. It's been 5.5 years since the summer of 2018 when I started this free Telegram channel, and I've literally just been sharing everything there for the past 5.5 years, and it's all for free. You can just click that first link in the description. It'll take you to my website. The Telegram channel link is at the top of my website once you get there. There's also like a free training video as well that teaches you how you can use the free Telegram channel, and then it teaches you my simple trading approach. This way it kind of gives you a good starting point. And then from that starting point, you can then use that to focus on your own trading approach, and you can use that to build your experience and build your intuition so that long term, hopefully 10 to 30% of you statistically can end up getting profitable, and it will be a trading approach that is completely unique to you, that you're comfortable with, that works for you specifically. I think that's the beauty of it. So this is your chance to now leave YouTube. It was great seeing you. You don't have to subscribe or like this video or anything like that. Just focus on your own trading approach. And hopefully I'll see you later down the line, maybe in another one of my YouTube videos. I hope you have a great rest of the day, and I hope this video was useful for you. Cheers.